Great. Good evening, everyone, and welcome to today's webinar hosted by DISA in collaboration with Stratfin, brought to you through our Accessible Cities initiative. Thank you for joining us. My name's Alan Downey. I'm the co-founder of DISA and a wheelchair user for the last 31 years. At DISA, we believe that creating truly accessible and inclusive communities requires more than just physical access. It also means ensuring people, their families, employers, and service providers have access to information and resources that can improve quality of life and promote economic participation. Today's session focuses on disability tax and the financial benefits and tax rebates available to persons with disabilities and their families. As a member of our Accessible Cities, we are privileged to partner with Stratfin, who have both expertise and experience in dealing with disability tax matters, and will help you unpack the often complex topic in practical and accessible ways. It is now my pleasure to introduce our presenters from Stratfin, as Dovi will take over. We trust that you will gain valuable insights from today's discussion, and we encourage you to ask questions in the chat or to raise your hand to ask a question. Over to you, Dovi.
Thank you, Alan. Thank you for hosting this. And if I can just say to everyone who's joining tonight, it's been a pleasure to work with Alan. I work with a lot of people who specialize in this space. And Alan, from the first phone call, was just there, available, keen to help, and it was really a massive pleasure to work with him alongside his partner Argor. So they're really an incredible team and dedicated to assisting fellow South Africans. And when they just heard that there was another opportunity and another angle of how to help South Africans, they jumped at it, and it's really it's been a pleasure to work together with them. So tonight's topic is stop missing out on medical tax refunds, and it's because I've seen how many families are missing out on this refund because it is a little bit complex, and a lot of people aren't super familiar with it. We've even seen accountants which look at us and say, oh, I remember this from when I was doing my studies, and it's something which people don't really specialize in, but then you come across the families where it actually matters, and it's something which is hugely beneficial and really one should take full advantage of. So tonight we're going to discuss who can claim, who qualifies, how at Stratfin we help our clients access these medical refunds. A little bit about Stratfin. We've been in the game for about 9 years, founded by Ilan Rabinowitz, and really we have a couple of brilliant angles on how to maximize your taxes, reduce your taxes, whether it's on company level, in payroll, and the topic which we're going to be talking about tonight, the medical tax refund. Ilan will be helping us with the Q&A, and you'll meet him shortly. So how it works, and I'm going to go into a little bit of theory, and if you do lose me in the theory, please not to worry, because the outcomes, the take-homes are going to be very, very clear. So I'm going to try to be as clear as possible, and what I'm going to start doing is just explain how medical rebates work across South Africa, irrespective of disabilities, impairments, medical conditions, whatever you want to call it. There's a medical rebate, and it's important to understand how that works and just see that there's opportunities that are being left behind in that space. And then we're going to talk about how disabilities impact that rebate and really completely change the game to a much more positive and fruitful outcome. So the way this medical rebate works is as follows. When you have a South African taxpayer who's been paying tax every single month, whether the company's paying for them as a PAYE payer or provisional taxpayer, you're paying X amount of tax over the year. The financial year runs between March 2025 and ended Feb 2026. That's the 2026 financial year. SARS then take 2 months. They take April and May and June as well to then compile all that information and all of that financial information which you dealt with over that year, and then you get an opportunity to do a tax return. So, and that opens up around now, which is why this webinar is really perfect timing. And what happens is SARS say, okay, fine, you on your RP5, you earned X and you paid this amount of tax, and then they'll get the medical aid tax certificate from the medical aid. Most often it will be given directly from the medical aid to SARS, and then perhaps there will be a Section 18A given from a PBO to SARS, and maybe other information. And and then when tax return season comes, you also need to give over certain information, and you get back a return. That rebate, you then get a medical rebate in your return, and it's broken up into two sections: Section 6A of the Income Tax Act and Section 6B. And the way the Section 6A works is very simple. Every every person that's on a medical aid, you'll get back on average 300 Rand per member on the medical aid. So say you have a family of four, 300 Rand times 4, 1,200 Rand times 12, you'll get back 14,400 Rand if I'm not mistaken. And that's what you get back in your Section 6A. Your Section 6B, you can get anything between 0 and 25%. That's the window of your medical aid tax expenses. So of your or whatever appears on your medical aid tax certificate. So this is really where the magic happens, because the average South African taxpayer will get back in their Section 6B something small. It may be a few thousand Rand, it may be 10,000 Rand. It's hard to know exactly what you would get back. And the reason for that is because depending on how much you earn, how much you pay for your medical aid, and your out-of-pocket medical expenses is what you get back. So it's hard to know exactly what a person gets back, but every South African taxpayer should be looking at this and making sure that they are getting a medical rebate, definitely in the Section 6A if they are on the medical aid, and in the Section 6B they should be getting something back. It will depend. The more you earn, the less you can get back, but it is a little bit complex, but make sure that you are getting something back. And already over here, there's two take homes which come to mind. Take home number one is that because you're getting a percentage back in your Section 6B, it's so important to always submit everything to your medical aid, because what that will do for you is your medical aid will act as so-called your logbook. They'll tally all of those expenses that you've been spending on your out-of-pocket expenses that they did not cover. So say you went to a psychologist or another medical professional and the medical aid covered nothing or something, but they didn't cover everything. If you submit that to your medical aid, the medical aid will have on your out-of-pocket expenses will have this taxpayer paid X amount that we did not cover, and SARS will now give you a percentage back on that. And that's why it's super important to always make sure that you submit everything to your medical aid. In the event that you're not submitting everything to the medical aid for whatever reason, make sure you're keeping your own personal logbook of all your medical expenses. And when tax return season comes up, make sure you are putting that information forward to SARS and maximizing your Section 6B. Point number two, which I've seen people missing out on, and that is it's super important that the taxpayer is the one paying for the medical aid. So say mom's the main member of the medical aid, but mom isn't a taxpayer, you're now going to be losing out on that medical aid credit. And make sure that the medical aid main member is always the one paying for the medical aid. And better if they also are the main member, because then it will be an automatic connection for you as a taxpayer and the medical aid. And if not, then you'll have to go and manually take those medical aid tax certificates, which are in your spouse's name, and put it forward to SARS and prove that you are paying. But the bottom line is that the person paying for the medical aid is the one who's eligible for a medical rebate. That's just a little introduction to medical rebates before how medical conditions, impairments, or disabilities impact medical credit. And this is really where the magic happens. My second favorite part of the webinar, we're going to get to my favorite part just now. So what happens is as follows. If there's someone in the family, and even if it's only one member in the family, that is struggling moderately to severely in their day-to-day life in one of 6 categories, the formula that SARS use is a much more generous formula that they will work out in terms of your percentage. It's 33% of your medical expenses. 33% of all your medical expenses you'll get back, as well as it does not discriminate against high earners. So even if you're a high earner previously getting nothing in your Section 6B, because high earners commonly get much less in the Section 6B, you'll now get your maximum amount in your Section 6B, irrespective of how much you earn. So let's go through the categories, the different medical conditions that do qualify, and then we're going to go into exactly what that formula is and how this all works. So the first category is intellectual. Anyone with an intellectual impairment or learning challenges, all children in remedial schooling, that qualifies as a moderate to severe impairment, and that will be for SARS, that would qualify to get the taxpayer a higher rebate, the higher formula that we just spoke about, which I'm going to elaborate on a little bit more. Vision, if there's an impairment on one's vision, it needs to be moderate to severe once again, and even after you've done your maximum rectification, you've gotten your best pair of glasses, and you still are being limited. Communication, here you have all your nonverbals, aparaxia, and even someone with a lisp that's avoiding talking up in meetings, avoiding talking up at school, is being affected in moderately to severely in the day-to-day life. That would qualify as a moderate to severe impairment and would definitely qualify for this higher rebate. Physical, here, this is, you can have sleep apnea, anyone with chronic fatigue, cancer, and obviously any mobility issue, wheelchair or crutches. SARS even go as far as to say that even if one is able to walk without assistive devices, but with a degree of difficulty, would qualify under the physical. So once again, I'm just pointing out over here, it's not how everyone understands it, that one needs to be disabled to qualify. Even if one is not disabled in the common sense, how we generally use it in South Africa, in day-to-day language, even if one is affected moderately to severely, that for SARS will still qualify the taxpayer for the higher rebate. Mental health, here you have your ADHD, anxiety, depression, and anything else which fits under the mental health, bipolar, and many other examples which can fit under the mental health. And lastly, hearing loss. Anyone with a degree of hearing difficulty and is now in need of a hearing aid would qualify for hearing loss. Once again, it does depend if it's both ears or 1 ear, and the degree of hearing loss, and if it's just 1 ear, all of that needs to be confirmed by your medical practitioner. And in all these cases, I do want to just say that your medical practitioner is going to be the one who's going to read that SARS form and approve it or disapprove it. So I can only say what my understanding as a tax expert in disability tax, and what I understand is that or is clear in the Tax Act. Moderate to severe limitations is obviously going to be that grey window, which that's where you're going to need a medical practitioner to finalize. So when there is someone in the family, and even one person in the family with one of these medical conditions, whether it's mom, dad, or any of the children, this will unlock the higher rebate, the 33% formula. And now I want to give a little example. I'm going to keep numbers round. Say you have someone who's paying 10,000 Rand a month to the medical aid contribution, which isn't outrageous in South Africa. I personally pay 9,000 Rand for a hospital plan, get very little back for it. And, to cover myself and my kids, that's what it's costing me. So let's go with the round number of 10,000 Rand. I'm now paying 120,000 Rand in my medical aid contribution. Then in my out-of-pocket expenses, let's just say there's another 2-3 grand which the medical aid isn't covering. That takes me from 120,000 plus 3,000 times 12, 36,000. That's 156,000 Rand. Already over here, I want to do a quick calculation. Previously, I would get 14,400 plus a small percentage. If I'm a high earner, I'd get nothing back. And if I'm, depending on where I land on the scale of high earners, I'll but likely I could get almost nothing back. Now, what will happen is SARS will say, okay, there's someone in your family which is struggling with learning challenges or any of the above categories which we mentioned. SARS will now give me back 33% of those medical expenses. 33% of 156,000 Rand is, if I'm not mistaken, 52,000 Rand. So I've just jumped my rebate from 14,000 Rand to 52,000 Rand, which is a game changer when I'm trying to give my children the best shot at education, or someone in the family the best support and the best help that they need. And it gets even better if the person with the medical condition is at a remedial school or is hospitalized or uh, is part of any other institution, a home, or even a frail care if it's for a parent, which we're going to discuss as well shortly. The fees that you are paying towards that is a medical fee, and you can now get back 33% of that. So just to give an example, let's just say my child is now in a remedial school and I'm paying 10,000 Rand for that school fee. I take 10,000 Rand minus 1,000 Rand, which is the average school fee for non-specialized school, for school which isn't qualified to deal with neurodiversity. And I can now do 12 times 9,000 Rand, which is about 110,000 Rand, and I can get back 33% of that as well, which is roughly 30,000 Rand. So now I've just jumped my rebate from 14,000 to 56 and an additional 30,000 Rand, taking me to 90,000 Rand. And once again, this is probably the best opportunity that one does have when it comes to doing the tax return and maximizing on tax returns. Another thing that one can look at is travel. If you are traveling to either a school or center or home, whatever it is that's related to your medical condition. We recently assisted someone who was traveling from Pretoria to Joburg twice a week for a full year to help their child with a cochlear implant. And we were able to do a massive travel claim just on that. Once again, travel commonly is not a medical spend, but when you are spending that money for your someone with a medical condition, SARS will now give you back 33% of that. Other expenses that come to mind is a facilitator, a scrub, even a domestic help, which is uniquely there to assist with to assist with the person in medical need, and definitely if it's a qualified nurse, all of those expenses will definitely qualify. And it even goes as far as to a little example. My daughter's speech therapist was insistent that we download this very expensive speech software for the holiday period and got an iPad. Now, that's an expense related to my daughter's diagnosis, and the speech therapist recommended it. I got that signed off by the speech therapist. I took those expenses, put it in my tax return, and I was able to get 33% of that back. And it's just, you can try to be creative. I think an example I discussed with Alan as well. If you're doing renovations on your home to assist with easy access to the bathroom or to the bedroom, whatever it is, all of those are expenses related to the medical condition and can all be qualified as a medical expense, and one can get 33% of that back. So, sorry, I'm jumping a little bit. My point over here is that it is important to note that you can't claim back more money than you've paid SARS. So obviously the only limitation in your 33% is going to be your tax. But you can wipe out your entire PAYE. Your company's been paying for you 10,000 Rand a month every single month for the last 12 months, 120,000 Rand. You can claim that entire 120,000 Rand back. And that's why this opportunity is so golden. You obviously can't claim more tax than you've paid, but if you're claiming back all your tax, then you're really, really doing well, and there's nothing to complain about there. So, just a little bit about how we assist our clients, and that is what we do. The first thing we do is that when someone comes forward with a medical condition and in the family, we first clarify, okay, how long has this family been struggling with, this member of the family been struggling with this medical condition? If it is uh, if it is three already for 3 years, we can do a backdated claim the last 3 years and go and claim all that extra money which has been left on the table, the 33% of all the medical aid expenses, as well as all the other expenses that have been left behind. And even if you didn't keep all the details and you don't have statements of everything, there still is a significant amount of money that can be claimed back. And the first thing we do is we assist our clients with the backdated claim. The next thing we do, and we've done some real magic with this, I call it Stratfin open heart surgery, and that is we look at the full story of both mom and dad. What's mom earning? What's dad earning? What's each one's tax story? And then we do the claim in the most favorable, where we'll get the most favorable outcome. Sometimes we'll split it. We'll go, let's do the school in the mom's name. Let's do the medical aid in the dad's name. And, oftentimes we even reverse. If we saw that the last 3 years, dad was getting the medical aid, but if we do it in mom's name, we can get a more favorable outcome. What we'll then do is we'll reverse what happened in dad's name and put it in mom's name. Obviously, when you're doing open heart surgery, you've got to be very, very skilled. You do not want to, you do not want to make any mistakes and trigger any audits. And that's where we specialize. We've done hundreds and hundreds of claims, and we know how to do it in a way where it does not trigger an audit, and really we can maximize the benefit and get the best outcome. Lastly, because the process can be quite challenging, the process, you need to get the RTRDD form signed by the doctor. You need to get different statements together. You need to get your medical aid tax certificates. There's a lot of details which you need to try string together. Your logbook for travel, and different things that need to be brought together. And as parents or whoever it is struggling with navigating medical challenges in their day-to-day life, to start worrying about admin headache of finances is probably not going to happen. So what we do is we assign a client manager to every one of our clients, and that client manager is mandated to handhold and assist each client from the beginning to the end, populating the RTRDD form, writing a letter to the doctor, explaining to the doctor where it needs to be signed, how it needs to be signed, revising it, making sure that all the claims are there, all the backup is there, so when it lands on SARS desk, it will go through first time. And if it doesn't, then we've got an account manager which is there to play ping pong with SARS until it comes over the line. And claims can take uh, sometimes they can take 2 weeks, 2 months, and some claims can take even 12 months. But like, we're really dedicated and we're there from beginning to end. Takes about a few weeks to collect all the documents and get that stacked together before it gets handed over to the account manager. And then with the account manager, we have had times when it's taken 48 hours, but we have many times when it can take 2 months or 10 months. So really, we play that ping pong with SARS until we get that over the line, and it's something which we specialize in. We love what we do. We're a team of about 20 of us, and with 3 CAs on the team, and really, really passionate about what we do. My main message tonight is, you may have followed me part of it, you may have followed me on all of it. Either way, take action today. Do not leave this opportunity behind. We don't know how long this opportunity is around for. There's talk of nationalizing private health, which the first thing will go is these medical rebates. So it is super important to take action today. It's not so complex. Take that extra 2 minutes to reach out to someone on my team or to speak to your accountant, however you want to do it, but do not miss out on this opportunity. Important to note that we're happy to work alongside your current accountant or tax practitioner and work together with them with getting these claims over the line. And lastly, our fee is 20% of success. So if we get back 50,000 Rand for you, we'll invoice you 10 and you'll keep 40. That's our fee. And we do it at risk. So if there's no outcome, if we don't get a positive outcome, there will never be an invoice from us. So really encourage everyone to engage. There's nothing to lose out on, only to gain. And over to Alan for some closing words, and then we're going to go to the Q&A.
Thank you, Dobby. If you need any further information after the webinar, you can contact Stratfin via email on office@stratfin.co.za or visit their website at www.stratfinmedicaltaxback.co.za. But they will be sending out a WhatsApp with prompts if you need any assistance. Alternatively, if you have any other questions regarding disability-related issues, please feel free to contact DISA on info@disa.org.za, or you can call me on 0845049176, or also visit our website at www.disabilityinfosa.org.za. Thank you.
Thank you, Alan. You really have the most incredible organization, so caring and attentive. And yeah, from what I've seen, you don't miss one email, one message. You're just really, really there. So thank you, and thank you for putting this together. We're going to jump to the Q&A, and I do want to apologize in advance. We're not going to get to all the questions, but as mentioned, we do have a very large team, and Alan's also happy to answer any questions or to put you in touch with the right people. Yeah, we do know that tonight's webinar is one of our largest. We've had over 600 people reach out for the webinar, and we've got for the next week we've cleared our schedules. Like about 5 of us on the team have cleared our schedules just to be able to assist. We're happy to assist, whether it's just a question you want to ask, you want to clarify, irrespective of whether you use our service or not. We happy, keen, and committed to helping as best as we can. Okay, Ilan, are we ready for some Q&A?
Yes, Dobby. Yeah, outstanding presentation. And yeah, if there are any questions from the audience, I'm happy to try and assist you. Go for it.
Okay, and I'm going to also compile a few questions into one if I spot that there's similar questions. Ilan, question, ADHD, genetic disease. Tell me more about what medical conditions do qualify and don't qualify.
Yeah, so as mentioned in the presentation, there are 5 different areas that SARS recognizes as areas where people have medical conditions that might be moderate to severe, where you'll get that additional benefit or credit from SARS. Hopefully, I remember them all. Okay, so it's anything physical. So if you've got any physical condition, Dobby mentioned a couple. Some of the ones that come up quite often are cancer, any actual problem with any limbs, okay? And then I think we had like arthritis and I think those are some of the common ones that we get. Then there is mental. That's very common. People suffer from anxiety and depression and bipolar, and those come up very often, and it's quite the requirements that need to be met to get the additional benefits are quite light or reasonable for the average person. Then there is vision. So if you've got any vision problems, that's quite difficult to meet unless your eyes are really quite bad. There's hearing, which I believe from several audiologists, like a moderate hearing loss does qualify. And then we have communication, as well as intellectual. And I think those are the areas that if you have basically any medical condition that you have will generally fit into one of those areas. And then if your condition is moderate to severe, then we can certainly claim the 33% allowance for you in your tax return and get back 33% of all your medical aid expenses and out-of-pocket costs, as well as any other expenses that relate to that medical condition that you paid for yourself and was not reimbursed by the medical aid.
Thank you, Ilan. So from what I understand, you're saying ADHD affecting a person moderately to severely would fall under either intellectual or mental health and would definitely qualify, as well as genetic disease, assuming it's affecting a person moderately to severely in their day-to-day life. Great. Next question, Ilan. Home modifications which for wheelchair or other contractor to bathroom adaptation, can one get 33% of that back?
There is a requirement, um, and I'll just look it up and I'll let you know in like a few minutes. Maybe we can find it, but there is quite a strict requirement of what you can claim for that home modification. I'll check it up in the legislation quickly, and if I'm able to, I'll let you guys know in a minute or so.
Okay, great. Ilan, this is an interesting question, one we haven't had before. Someone's on extended sick leave, they get in their payroll, they're getting a travel allowance, but now they're not traveling. So would claiming the medical now trigger an audit and say, oh, 1 second, you haven't been traveling, so like now we're gonna penalize you on the travel. Like how does claiming for the medical affect the other areas of your tax return if the other areas of your tax return uh, aren't 100% up to scratch, or you haven't kept an appropriate logbook?
Yeah, I'm not sure I really fully understand. You're saying if the person's receiving travel for the whole year, yet they
Yeah,
want
but
to
now they've been
claim.
on sick leave. So now they're worried that by putting through medical, this might
Yeah.
like SARS might then say, okay, but where's your logbook?
Okay, so the travel allowance and the medical credits are completely separate. Remember, the medical is not only necessarily based on the main member. It can be any member in the family. So it could be the spouse who has the medical condition and not the main member who might be the employee. So, the two are not related from that perspective. Um, Also, when you get a travel allowance, you do put in a logbook, and obviously the days that you are sick from work, you do not record any work travel. You record personal travel or no travel. So the two won't contradict at all.
Thank you. Ilan, can we at Stratfin help with the logbook backdating 3 years as well as a backdated claim 3 years? And what will be our maximum fee?
Yeah, we can stick with the logbook. Um, if the If the taxpayer is able to provide us with all the information and it's just merely putting it together, then there's no additional fee over and above the normal fee that we charge, the 20% of what we're successful with. So yeah, I think it's good news for the client that there's, even though there might be a lot of work, a lot of expenses to claim, or various back and forth with SARS, we don't change our fee based on that. It is a fixed amount. It's only based on success. You've got the best team behind you. I know I see them at work. They're really outstanding. They're world class, and there's no difference in fee if we're doing the logbook or if you're doing it. But we just need a lot of guidance from you. We can't make up the logbook. We need the dates and the distances that are being traveled for the medical condition. Usually it's to school, so it's pretty standard. It's from your house to school and back on the days that school is open. But the one requirement is that it needs to be more than 10 kilometers distance from your house.
Thank you, Ilan. I see there's a lot of excellent questions, yeah. And I'm just trying to, yeah, there's about 50 questions in the chat. We won't get through them all. But as mentioned, please, I do urge everyone to reach out to someone on the team, and they're happy to answer the questions. As mentioned, happy to assist, and we're just really there to help. But a theme that I keep seeing is asking regarding different types of medical conditions. And as Ilan mentioned, it's anytime a person is affected in their day-to-day life, it will fall under one of those categories, and you'll be able to get 33% of that back. Ellen, anything that
Sorry, Dobby, I found out. Okay, so if there's any adaptations that need to be made to a house, um, it says here, for example, mobile ramps or tie downs used to assist wheelchair users to move in and out of vehicles or buildings that don't have any ramps, or modifications to homes, those or bathroom, modifications to the bathroom, though, and to a vehicle, if you have to modify the vehicle, all those costs, those can be claimed as well. So, depending obviously on that limitation of your tax that you've paid, SARS will refund you up to 33% of what you've paid for those modifications.
Right. Alan, anything from your side that you think may be of value to point out?
Do you have any information on service dogs? The costs, I think I saw something that you can claim back, vet
Yes.
costs, so on, and even dog food. I'm not quite sure about that, but do you have any
Ilan?
information?
Just checking out, but yeah, I think I saw. Come to you shortly on that one.
Okay, let's move on to the next point.
Okay, so service animals. So the cost of an animal specifically trained to be used as an aid to perform daily functions can be claimed, as well as the care and maintenance, including food and veterinary care of such an animal. So good to go.
Great. A last question that I'm noticing is just important to clarify. This rebate is on a person's tax as an individual taxpayer. If your company is paying these expenses, or if you're not paying PAYE, this all wouldn't be relevant. That's just something which I've seen come up a few times in the questions. Alan, I think we've been through everything. I think we're some. I think we might.
Just to add on that, let's say a person is self-employed or they are paying provisional tax. So it's still income tax they're paying. So you could be paying PAYE, provisional tax, or income tax during the course of the year. Your medical aid credit will be credited against that tax that you've paid. Um, so it's not only PAYE, and not only if you're a salaried earner, but if you are a provisional taxpayer as well, then you can still claim that. We can still get that credit back for you.
Amazing, thank you. I think we're done, and I think our
Sorry,
timing was good.
one more thing. One more thing.
Go
I
for it.
think we have determined that many people don't know that if they are paying the medical aid for the immediate family or the dependents in their family, obviously that is what we can claim for them. But if they are paying a medical aid for, let's say, another person who's dependent, an adult child, or perhaps even a parent, talk to us. We know how to claim that back for you as well. And that could make a huge difference to your final credit that you get. So that's really just another tip. Speak to us, speak to one of our team members, and we'll help you and show you how we can also claim that.
Great, thank you. 3 minutes left of the game tonight. Scores 1-1 if I'm not mistaken, and I'm glad we get to watch the last 2 minutes. So thank you, everyone. Wishing you a wonderful evening, and thank you for taking valuable time out of your evening to allow me to share my knowledge and Ilan's knowledge. And thank you, Alan, again. Really appreciate it.
Thanks very
Thank
much.
you, everyone.
Appreciate
Thank you. Good night. Good night.
it. Good
Good
night.
night. Cheers, guys.